Hi friends, today we discuss about income from capital gain in direct taxes. First we see the meaning of capital assets. Capital asset is nothing but a property of any kind held by an assessee, whether connected with their business or profession or not connected with their business or profession. That asset is called as capital assets. Example, any fixed asset that are owned for the person or investment purpose. Next, the asset can be tangible or intangible. Next, all the properties, stock, bonds, and machineries owned or held by an organization or an individual are called as capital assets. Trademarks and also goodwill also called as an capital assets. They are generated value for the companies over a long period of time. Next, we see about the types of capital assets. There are two type of capital asset. One is a short-term capital asset. Another one is a long-term capital asset. Short-term capital assets means all the capital assets are which held for 36 months or lesser than from the date of transfer of their owner are held as short-term capital assets. However, there are some assets which are classified under the short-term capital assets if the holding period is lesser than 12 months. Those are all the assets are lesser than 3 months is called as a short-term capital assets. For example, equity share, preference shares, all other securities issued by an Indian company, and also all the units of UTA. Next, we see the meaning of long-term capital assets. Assets which come under the category if the holding period is more than 36 months, that asset is called as long-term capital assets. Next, we see about what all the assets are not included in capital assets. Capital assets and fixed assets are synonymous for each other. However, some of the fixed assets are not part of the capital assets. They are given below. First one, all stock or consumable raw material. Second one, goods like cloth and furnitures which are used for personal use. Next one, agriculture land in rural area in India. Next, special bearer bonds issued in the year of 1991. Next one, gold deposit bond issued in the gold deposit scheme in the year of 1999. Next, we see about the capital gain. The capital gain is nothing but profit or gain arising from the transfer of capital assets is called as capital gain. There are two types of capital gain. First one is a short-term capital gain. Second one is a long-term capital gain. First, we see the meaning of short-term capital gain. Short-term capital gain is a profit realized from the sale of the personal or investment property. Yeah, short-term capital assets that are held for the less than 36 months. Next, we see the meaning of long-term capital gain. The long-term capital gain is a profit earned from the sale of any qualifying investment option held by the investor for more than 36 months at the time of sale of the at the date of the time of sale of the assets. Next, we see how to calculate or how to compute the short-term capital gain. We have a format for computation of short-term capital gain. First, we take the selling price. So, selling price is nothing but there is a sales value less expenses on sales. Expenses on sales means brokerage, commission, any other legal expenses relating to the sales that will be less. After that, it's called as a net consideration. After the net consideration, will less cost of acquisition and also cost of improvement. So the cost of acquisition is nothing but that's the cost of purchase. Cost of improvement means cost of improvement including repairs, modifications or additional constructions, that is called as cost of improvement. After the cost of acquisition and the cost of improvement is less, and next we calculate we have some exemption in capital gain under the section 54B, 54D, 54G, 54GA. So that's our exemptions for fully exempted incomes for short-term capital gains. That's a 54B is related to the agriculture land, 54D is an under the 54G is related to, and also GA related to the short-term transfer of capital assets and also reinvested in new assets, that is called as exemptions. After that, we have some balancing amount. In case of the answer will be plus means short-term capital gain